Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, guys. Well, we got a day ahead of us. Let's put it that way. I am a little bit behind here, so hold on a second. We got US Producer Price Index month over month coming up here with an expected reading of spot 2%. And core PPI month over month looking for a reading of spot 3%. If we get those numbers, it would be a positive thing for the market, I think. And I do see evidence already here coming in that they are pulling and that the markets are anticipating this to be a large event. Of course, the CPI is like the real headlining event for this week, which is tomorrow. But the PPI is going to matter here. So I'm going to just come back here looking at other markets here. There's not really a whole lot of movement overnight, right? Gold, silver, still where they are. Copper, still where they are. So everything is waiting for these numbers. Bitcoin still treading water, and the dollar above almost to 113. So if these numbers are higher than expected, it could be very negative for the market. This is the thing, is that the bad number is, could like destroy the market and move it 5%, whereas a good, well, CPI, they're saying if the number is bad, the index could drop 5%, but the upside is not quite as good looking. So keep that in mind. Get everything over here. We're at 3.93 in micro yields. So I'll keep my my account locked here for the moment. There you go. Jigsaw trading. Killer goals that disrupt your progress. I bet you that's a good article. Okay, here we go. Okay. The headline PPI is higher than expected at spot 4 versus spot 2. Core CPI is in line though. So it's actually mixed. But it does look like it is a sell. Will our bonds move due to the UK actions? Unclear. It's unclear. It's you're probably asking the best question to ask today, right? But I don't actually know. Look at this move. We can't trade it because micro's got like no liquidity, but we moved 3 basis points on the news, essentially. Okay, so what Dan is asking about is yesterday there was a lot of market volatility and let's say panic when the Bank of England's Governor Bailey said that they've got 3 days for the pension funds to get themselves square before the Bank of England ends their buying operation. So the first thing to keep in mind off of all this is that the drop dead date of the 14th was set from the very beginning. This was always the case, that they said it was only going to be temporary and it was only going to go to the 14th. Okay. Some people thought that they would extend it. There's like, oh, of course we get to that and they're going to extend it. That sort of a thing. Okay. Bank of England is saying, no, we're serious. Okay. If we get to the 14th and there's still a problem, yeah, they'll probably do something. But the thing that's been going on here is that these pension funds do need to sell assets or do something, and the Bank of England is not as experienced at this sort of thing as the New York Fed. So there's been some trouble. Like there have been many days where they went and they did their offers and they didn't buy anything, because the whole thing has been that like the banks have to put their offers out, and then the Bank of England will choose to accept and take them. And so you can't just set like this sky high price. It basically has to be right at the market price, which was not what some people wanted or expected, but is really what they should be doing, I think. So how many pension funds have been dragging their feet out there and haven't been taking advantage of the time that they had? Who knows? Who knows? If they were smart and they were taking the risk adverse path, they should already have done the majority of their trading. So how much is left? There's no way to know. No way for me to know. But it's definitely something that we got to keep an eye on. And so if we start seeing around the top of the hour that kind of like autocorrelation selling, definitely going to pay heed to it. Yeah. But for all we know, that movement yesterday was overreaction. I have to say, the action yesterday was like, oh, we had a good trade, and then it kind of came back on us. But then it pushed back down later in the day off of that news. So we're in a situation where short-term liquidity concerns end up trumping all outs. And although you might be able to make a bet on a higher time frame about how that is all going to play out in the end, when we're looking at it on the time scale that we do, it's incredibly difficult to play it, right? Well, they got a good pullback, and now they are starting to push back down again. So what's a good example of autocorrelation selling for dumb people? I'm asking for a friend. Okay, so Zach, what I would be looking for is like if you pulled up a chart with cumulative delta on it, that you see the cumulative delta moving in a straight diagonal line, right? So autocorrelation means that the past movement is highly predictive of the future movement. Well, not the future movement, but there's a lot of because I don't want to say that it's predictive, but there's a lot of similarity, right? You look at this section, it looks the same as this section. That's what we mean by autocorrelated. So when we say autocorrelated, it means it's just a straight trend up. It's a really consistent trend. Okay. A more technical way of putting it would be the R2 of cumulative delta is close to 1. Would be a way to do it from like a quant perspective. So I don't know. I'm interested to see why the PPI month over month was not, why they got that one wrong. They were off by 0.2%. That suggests that energy costs were higher than anticipated, right? Still looks a little bit too volatile for me to want to touch it. Well, I'm going to distract myself here. Joseph Wing, what if this isn't some liquidity or market functioning problem? What if the market clearing yield is actually super high, so high the financial system can't handle it? Asks Joseph Wang, responding to Jim Bianco, arguably the biggest round trip in the shortest period of time in over 200 years of gilt trading in the UK. The 30-year yield rises to 5% first time since Bank of England intervention, and the Bank of England head Andrew Bailey said yesterday that the central bank's support for this market will end in 2 days. What if the market clearing yield is actually super high, so high the financial system can't handle it? Thinking there was a one lot there. So there a lot of volume went through in the micros at 3.96. Yeah, we got a large bid popping up out of nowhere at 01. Oh, they executed some of it, and there wasn't much behind it. Good afternoon, Vibe. There's a comment from Nick Timmerose, but there wasn't any real new information in that, so I'll skip that one. And Jeffrey Gunlock talking about the weather. Okay. Oh, we have Federal Reserve minutes today. I did not realize. Mohammed A. L. Arian, most of the interest in today's release of the Federal Reserve minutes will be on both the implied and explicit analysis of the policy approach to reducing inflation without overly damaging jobs and economic growth. Also worth noting the treatment of financial stability concerns. Okay. So I'm just not sure if that PPI news really moves the needle or not. The market definitely sold on it, but the actual amount of volume on it and everything wasn't really a whole lot. And I do think, like, for instance, this stuff with the UK bonds probably could end up mattering more today. I don't know if that means that it's a sell or... I mean, I would think that if that mattered, it would be a sell. But maybe they're done. Also, with the core being in line, I think that gives me hope for tomorrow's CPI, right? That tomorrow's CPI will be in line. But I'm not sure if that gives me a trade. I mean, I might have been able to get filled at 3.96. And I would be okay with it right at the moment. Well, I think that we should change the music to something a little bit more chill. Because well, not too chill. We'll go lo-fi. We'll go lo-fi. Because drum and bass is just making me want to trade. Oh man, I did not realize the S&P 500 dropped 25 points on that. The reaction in the equities was actually stronger than in the treasuries. Does that mean you should buy the S&P here? Well, I don't know. It would make it. It would suggest that maybe there's a mispricing there, but doesn't tell you what the next set of orders are going to be, does it? I think I got something on my hand here. Nah, I think we're okay. Just in, mortgage rates rise, reach another 16-year high. Yeah, we're talking about PPI. The PPI, so just to review here, the headline PPI number was slightly above expectation. The core CPI was in line with expectation. The markets all sold a little bit on that news. The S&P 500 sold substantially more than the Treasury market did. And I don't see a huge change in spreads. I don't see a huge change in spreads. Do see the S&P 500 maybe making a move up. So I'm thinking I'm going to go and wash my hand because I think it's just driving me crazy. There's nothing there, but then I'll feel stickiness. Hold on a second. Why you got so? I think I got something on my hand from breakfast. I guess I don't know. Touched something weird. I don't know. Joe Rosenthal, Fed's rate hikes could make inflation worse by deterring new investment into energy production at a time when the world is facing an energy shortage. Bob West, founder of Console Thunder Energy, says rising interest rates might not mute inflation, but could actually deepen it by deterring the investment needed to cure inflation itself. In his view, the world is suffering an energy shortage, and to resolve it needs more investment and cheap capital. Energy is one of the world's most capital-intensive industries, requiring billions of dollars each year to produce extra oil, gas, coal, and electricity. As interest rates rise, developing more energy also becomes harder. Well, that is true. But the thing that I think is deterring investment the most is government policy right now, not interest rates. So what do you do about that one? Okay, so they do appear to have found a pretty good hole here around 11101 in the Treasury. The S&P 500 got a little bit better of a pop move up there. Not too sure. So if I were to look at what are the order flows that we have today, so we have people trading on PPI right now. I think that that's mostly passed. Then we have people possibly hedging themselves for CPI tomorrow. Also for the Federal Reserve minutes later today. Also, I think we do have an auction today, don't we? Yeah, so we have a 10-year no auction. Okay, so that's important to note, although we haven't seen any big orders icebergs yet. But when we have an auction that has a slight tendency to cause buying. And then we've got the Bank of England stuff. Yes, the question was CapEx down before rate hikes. I don't understand what you're asking now. But then is there more selling from Europe, from the UK? Well, right now, market seems to be suggesting no. In fact, what am I seeing? I'm seeing buying across the board. Seeing buying across the board. that buying that we're seeing is maybe enough to justify a trade. But I'm not sure that I can square it away enough with the expected flows that I'm going to see, because when I game all that out, I think that probably the order flows are still tilted to the downside. But seeing this kind of this pullback and everything is making me at the moment suspect that we're going to be kind of chopping a range. We'll see. If we break out of the highs at 09, then I'm gonna really wish that I had bought it, right? But for the moment, I don't think I have enough information to really. I think it would be a bit of a gamble in this situation, and there is still a lot of volatility, so. In fact, it's looking like after that initial rise that they are coming back and being drawn back into the hole. How has your trading changed since your first stream to now? Well, I think that I focus much more on the news and the flows and so forth, and I really ignore a lot of the tiny little aberrations that I see that I thought maybe were predictive. So I thought that I had some patterns that I saw in the order flow that those patterns really effectively predicted where we were going to go. And I think that my view of the statistics and everything is a lot more nuanced than that now. Right. So there was a lot of things that I kind of knew, but like I didn't know why I knew them, wasn't certain in my knowledge. And now I have all of this research to back things up and so forth. And I also think that I take way less trades. That was the thing that would kill me the most at the beginning, was that I just always wanted to be taking a trade. Like I would be trading action like this and I have already taken like 4 trades or something. Do you ever look into the footprint? So very rarely. The one thing that I frequently see in the footprint is if we are in like a crazy bear market, okay? And I'm expecting like central bank intervention of some sort, like the plunge protection team. I come into the S&P 500 and look at the footprint chart, and I'm looking for heavy absorption at the lows. And I mean like 20, 30,000 contracts, you know, roundabout in a 30-minute period. And that has been a good indication of central bank intervention. Well, let's say plunge protection team sort of stuff. So during COVID, that worked really well. If there was a move that happened overnight that is really interesting and confusing to me, and I really want to know what was happening at the time, then I'll pull the footprint chart up and look at it to try and understand why the market moved the way that it did. Because you want to be able to understand, like, if I saw high volume, was it lots of market buys and lots of market sells going in together? Or was it all market buys hitting into a price and the limit orders holding it, right? Those are the sorts of things that I can sort out with a footprint chart. But you just got to remember that the past data is just not very effective at predicting the future data. The market generated data, at least, what we see in price and volume, it's not predictive per se. So somebody was asking me this on my price action chart, because they were saying, I think they were trying to, what is the word, bargain. They were at the bargaining stage of the stages of grief, where they were saying, but you do use price action in this kind of, well, the things that he was talking about weren't price action, but he was like, you don't look at the price when you get in there. Well, no, like Like if I think that there's more buy orders are going to come through here, the price doesn't matter so much. I mean, yeah, I will look to see, okay, do we have a liquidity hole? Okay, where are we relatively speaking to the liquidity hole? So like right now, it's a little tough for me to buy this because the liquidity hole was probably 01. I do think that we could see some more trend to the upside, but you're just not getting a good price. So I might factor that in a little bit, but the much more important factor is, are there going to be buy or sell orders coming? So if I have a piece of information that suggests that there's going to be buying, like let's say I think that the best theory that we have right now is that there's going to be buying because they want to buy bonds for the 10-year auction, for instance. Okay. So if I knew that that was going to lead to buy orders, current price doesn't really matter. What matters is that there are other people who are going to buy behind me, right? The future orders are what matters. That does look pretty solid right there. Okay. Heard a little click there. What was it? A large bid at 03.5. Interesting. It almost immediately pulled though. I think that the large bid went up there at 03.5 and then they traded into it. Oh, that's really interesting. Iceberging at 03.5. Okay, well they take it off her. Not necessarily the way you want to see that play out. This song has some weird bass stuff in it that I don't like. It's distracting to me. It sounds like a zipper. So I took a trade at 3.95. I did see 3.95 and the micros clear. Then we had that iceberg, and then when the iceberg resolved, they moved down. So I want to see them take 03.5 back again. Would be preferable, but this is not necessarily the way that's not the most optimal entry there, right? Okay. We want to see something more like that, and we'd like to see them clear 04 easily. Have you ever used... Well, I've definitely looked at the NinjaTrader 8 market depth map, but I didn't really use it. I did not think that it was nearly as good as the Jigsaw one, right? So they did take 2 trades there, but the bids aren't holding. I am seeing a little bit of moderation in the flows here now, that we've reached the top end of this range again. But I'm watching the 5-year here. The 5-year looks like it may do something. Yeah, no, they have like that market. They have like the order flow depth map thing that kind of is the same as, well, not the same, but similar to the Vista chart. Yeah. The bigger thing is that I don't find the heat map very useful. I just don't. I think it looks cool, but there's nothing I get on the heat map that I don't get watching the DOM. And there's lots of things that I see on the DOM that I don't see on the heat map. See, the problem with the heat map is that you're doing a heat map of like all of the prices, right? And a lot of the change happens here on the inside. The thing that has the most informational content is here on the inside, and it's with the smaller amounts. It's when there's like 300 to 200 contracts here. Every other price is 900. So when you're looking at on the heat map and you're looking at the two inside prices, you don't really see anything. You don't really see anything on the inside. You don't see anything interesting. And so, like, the most useful information that I see, I'm not seeing it on the heat map. What does the heat map show me? The heat map shows me certain prices where there's more liquidity, right? Well, that information isn't as useful. I think that people have these ideas that, like, the market will go towards the liquidity sort of a thing, but it's not so simple. It's not actually. I wish it was that simple, but it's not. You get what I mean? So yeah. I think part of the reason why I'm a little sour about, I guess this is the most sour I've been about the heat maps, but I think part of the reason why I'm a little sour on heat maps is because they charge so picking much for them. You think that the market will recover today? Could. Like the market puked on that headline number for PPI, but I actually think that core PPI number being in line with expectations is really encouraging. That's really encouraging, because if we can get core CPI to be in line tomorrow, that's going to be a buy. I mean, like I've said, the upside is not as great as the potential downside on CPI, but in this market, you take what you can get, right? I think that an inline or lower would be really good. It is said that the New York session for Forex closes 4 p.m. U.S. time. Does this mean the 4:30 market's still open and close when time hits 5 o'clock p.m.? Yeah, so for Forex, you tend to see the moves for Forex earlier in the day. In fact, there's a key settlement period. I forget when it is. I think it's like 11 o'clock Eastern time or something like that, where like a lot of Forex volume settles, and you're like significantly less likely to see big moves in Forex after that. And then that time between 4 and 4:30, the only reason that you get that is that earnings after market earnings, and some of the markets have extended sessions there for that hour before everything shuts down, because an hour after that at 5 p.m. US time, everything shuts down and they restart it for an hour, right? So then you definitely nothing happens there, right? And then you get the start of the extended session, where you might see a move at the start of the extended session, but then the market kind of waits until Japan, right? So there's definitely times that matter, right? Okay, so I was looking to see maybe some volume resolved to the upside in the 5-year, and it looks like we're getting it. We're also getting a pretty extended amount of volume coming into the 30-year here, so. Because now the inflation news also did not affect the market as expected, because it recovered very fast from the bottom after the news. I think the issue here is that PPI is just not nearly as big of a piece of news as CPI. So I think that the market overreacted on the initial move. I've done some back testing for indicator-based strategies for stocks, and 9 to 11 Eastern time was almost always the best time to trade. Oh yeah, totally. Well, that's the most volatility. That's the most volume. Once you get to 11 Eastern time, then London is closed. Once London closes, there's a lot less activity. It's like you get the London close, then you get lunch, okay? Then the next piece of information that you get is the bond pit close, and margin calls. So those come out at about the same time. Then after that, then you'll tend to get that last hour of trading in the NYSE session. There's more activity. I've done a lot of strategies where you just pick a particular time, and based on what the trend was at that time, you make a trade either in, for or against that. And there are definitely times, right? So one that I found was that if you went against the trend at the 8:30 news time, that tended to work out better for you. In other words, when the news surprises the market and counters the trend that we had going into it, there's more profit available than when it's in line with the trend. Okay, that makes sense. You can only kind of see that on like a big data set though, and probably not something that you want to try and make your sole trading strategy. Okay, but it is maybe a useful piece of information, right? But then I also found that there's between, well, right about between now and the S&P 500, you tends to be a good time. Tends to be a good time to take a trade. Was the other one that I found. So, and then you're more likely to see a reversal in that 10:30 time frame, 10:15 to 10:45, roundabout there. Oh, that's weird. I my chart over here shows that we did trade at 06, but I don't see it on my DOM. Maybe it had touched it twice, and the second time that they touched it, nothing traded through it or something like that. Some of those bids are a little soft though. And while we did see some really good volume come out in the 5-year, the 10-year is starting to go sideways. So here is around the time that I would expect to maybe see a meta order start of some sort. I'm not sure if we're seeing one yet or not. Kind of the issue, this is kind of the thing, is that we're expecting meta order long. We're not going to be sure that we're seeing a meta order long until it's already moved, right? That's why you kind of want to get in when it's quiet and predict the meta order rather than waiting for the meta order. That's always the issue, because by the time it's certain, it's too late, right? There is. I am starting to see a decent amount of volume come out here, though. Looks like they traded them back to the 04, though. So that might be enough to... yeah. Don't like that at all. I may be a little bit too sensitive there on that one, but I did get out off on that drop. I did not like how that came through, because we had a pretty good, strong, dedicated push coming through to the upside, and then it just kind of gets dragged down out of nowhere. That kind of suggests there's a force out here that I'm not considering. What do you think about Renko / line break Kagi cart charts? Okay, I don't use them. So I kind of have an axe to grind against Renko, Heikinishi, etc. bars, because vendors will use them in back tests to fool traders. You cannot trust back tests that use those kinds of bars. You just can't. Even if it's one that's presumably back testable, it still biases your trade too much. So you need to have a bar, essentially, like your what do we say? How you quantize the trades, okay? Because if we were to completely unquantized, unstructured data, it would just be each individual order, right? And what we do is we group them by time frame, okay? But even time frame, just as we talked, even time frame has its biases, right? Because there are certain times of day that certain things happen, right? And that could affect your back test. And unless you say don't ever trade around the bottom of the hour, sort of a thing, right? You have to factor it in your back test, okay? Now, when you do things like line break, especially Kagi charts, this sort of a thing, you're biasing it towards when price broke through a key level, sort of a thing, right? So you're adding even more bias into your quantization, and that biases the results that you get out. And what tends to happen is it wants to take trades in places where the market is moving fast. This makes sense. Market's moving fast, and then it wants to take the trade. And so you have an algorithm that basically selects for trades that are unlikely to translate into live trading. Makes sense? So that's why I'm kind of against them. It's more for algorithmic reasons. But like here again, like what are the things that I think matter, right? And there are 5 things that I look at. The first thing is predictors of order flow. So that's, generally speaking, that's news, but predictors of order flow is a little bit larger of a category of things, okay? Because it could involve like end of month rebalancing, for instance, or gamma positioning. Could be also be predictors of order flow, okay? Number 2 thing is I want to see the order flow. I want to see that the orders are correlating with my prediction based on the predictors of order flow. I also want to see like what the current liquidity conditions are. Are we in a liquidity hole? Where are we relatively speaking in that hole? That sort of a thing, right? Okay. Number 3 thing is volatility. So volatility is the most technical aspect here, right? Because volatility is mostly path dependent. So that's kind of the interesting thing, is that you can use technical analysis for volatility, right? But that alone doesn't give you a trade, because it doesn't tell you are we more likely to move up or down, right? So but volatility can tell you how much we're likely to move, so that's helpful. Okay. A number 4 thing is correlations. So I want to know where the money is coming from and going to. Right now, we're very correlated with the 6J. Are we correlated with the British pound? Maybe a little bit. So maybe this is selling from the pension funds. Although, well, no, we got a decently autocorrelated flow in the 10-year at least. So maybe we could have justified a trade after I got out. Right? Autocorrelated flows, and then the last thing is the risk management side. Okay, those are the things that matter, that I think is the essential parts of a trading strategy. So how does a Renko line help you? I mean, that's just the past history of price. Doesn't really tell you a whole lot of anything. It's interesting. Maybe you could find a pattern in there that helps, but I generally don't put much stock in it. I don't find much edge. I've spent a lot of time researching things like that and never found anything with any kind of empirical backing. So, well, we didn't make it back to 111. I'm glad I puked. Kind of tempted to go short now, but that just makes me feel like I'm being impulsive. So I think that I'm gonna sit on my hands for a little bit. We could still be in the situation where we're just in a choppy market, right? Like when it came back there, it fell very quickly and very easily on not all that much volume because the liquidity was still weak there. So I don't think that it's too big of a surprise that we came back to like the 111.01, 111 even area. Now, if we push lower, then that might be interesting. Renko is good to look for structure. Well, so Renko bars. So I didn't say anything specifically about Renko. I was thinking more line break Kagi, but I hate Renko bars. I hate Renko bars with a passion, actually, because Renko bars lie. Okay, a Renko bar basically will go back and redraw a bar after the fact to make it look clean. But the reality is that those turns were never very clean. So what a Renko bar does is it fools traders into thinking that all you got to do is get in on the trend and it'll be super easy. But when you look at the actual price movement that those Renko bars represent, you find that it's far less clear at the moment where it turns that it's going to turn, and that by the time you have a Renko like totally confirmed, it's like it's too late and there's no profit left in it. So that's a good down tick there, 900 contracts. So you'll see something like we're moving down, right? And then we move up and then we move back down, right? And so you say, yeah, as soon as I see the Renko bar coming down, I should be able to go short, right? And what happens is that the point at which you know that's going to happen is like right here. And then the point at which you know that it's coming back the other way is like right here. And so you don't actually make money on it, right? Because you're losing too much from the edges. That's what I found backtesting those sorts of things. The same thing with pivots and zigzag, and they all suffer from this problem. That basically the signal that tells you that the trend is changing is too late to make any money from it. Because if you had something that told you every time that this was going to happen, and it was reliable enough, you know, if you got something that told you when that was going to happen 60% of the time, then trading would be easy, right? Doesn't exist. Don't think it exists. Well, got a decent number of viewers today, so probably some new people. Welcome. Make sure you click that like button and the bell icon, because when I post videos, you're going to want to see them. You don't want to miss that. And it also makes it a lot easier to find the stream in the morning if you click the bell icon. Okay, your experience matches mine 100%. What about tick bars? Tick imbalance bars? Okay, so tick bars, it's kind of the same thing that a tick bar biases your algorithm to more volatile and quick moving markets, and it essentially starts you can get a blah 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 blah. You'll get an algorithm that backtests really, really well, but then when you start trading it, you never get the prices that you're supposed to. This is what I get when I try and do tick or volume bars, essentially. That's why, like, I want the quantization of my bars to be as arbitrary as possible. And time is frankly not arbitrary enough. Time is frankly not arbitrary enough, but it's the most arbitrary that we have. That's why I would recommend you, if you're writing an algorithm, to just use a time-based quantization. Use time-based bars. And the larger your time-based bar is, the more likely your results are to translate to live trading. You read a paper about high frequency trading using a volume clock. I don't know. I would like to see that paper, but here's the thing. The people that write papers make some of these mistakes sometimes. For a long time. So a lot of people early on, when we started having the arguments about, technical analysis doesn't work, and people would come back and they'd say, well, this technical analysis strategy works. And it turns out that it was an older paper and that they had all of the data snooping biases and so forth. Like they went through and they tested a bunch of different things and then selected the one thing that worked the best. That's data snooping. So no guarantee that that's going to be the one that continues to work the best, right? It's probably just random chance that it turned out that way. You get what I mean? So it was only later, like I want to say after 2008, let's say, to be certain, after 2008, then you started to get the studies where they all said, okay, here's data snooping, here's selection bias and all of these things. And so you have to account for these in your study. And here are the kinds of methods that allow you to overcome these problems. And then the studies that you got after that were much more reliable. But what they tended to show was that the technical analysis stuff didn't work. In other words, all of these things, it's basically like people will come in and work until the backtester tells them what they want to know. And when you do that, you're likely to get a strategy that doesn't translate to live, right? You're back when you're using machine learning to try and find an edge on its own. It tends to select a strategy that tricks the backtester rather than something that actually works. You're more likely to break the backtester than you are to find a technical strategy that actually works. Lopez de Prado recommends using many different bars for machine learning. Why would he say? I don't know. Maybe he doesn't know. Maybe he doesn't know any better. I don't know who this guy is. Like that's the thing though, is like if some study had come out where they, they were they said, I just gave this algorithm one price time series. I gave it one price time series, and the machine learning algorithm traded on that price time series, and over a 5-year period, and here's the Sharpe ratio and everything, and it shows statistically significant, economically significant profits. Okay, then I would be like, we've got to trade technical analysis. This is the thing. This is all we got to spend our time doing now is trying to figure out how they did that particular thing and stuff, right? It doesn't exist. I've never seen a study like that. Oh, you wrote advances in financial machine learning? No. Oh, that. Okay, I know which book you're talking about. I'd have to go and read and see what he's talking about. Just realize that these different kinds of bars will actually bias your algorithm towards trading in certain kinds of action. And it might not be the kind of action that you want, right? Now, if you had one that biased the algorithm towards places where it's not moving, okay? Like when you got a really big trade, when you had a really big move of like 8 ticks or whatever, let's use the 10-year here as an example. If there was a move and it was like 10, 16 ticks, that ends up being 1 bar. And then when you have an area where it only stays in the range for like in a 3-tick range for like 45 minutes, that ends up being like 10 bars. right? So then what would that do? That would bias it towards trading in the range areas. And that might give you a better chance of having something that translates to live, right? Although I think it'd be super hard to find an algorithm that actually gives you a positive expectancy from those areas. So action here's still a little testy, I think. They didn't break the lows, bounced back up to 03, came back to our whole area. I need to get into the book. So I finished my one book, my data engineering book yesterday. I think that we could start doing some more machine learning based stuff soon. I definitely want to do that volatility as path dependent study and try and duplicate that in Python. I guess the next book I have on my list is Steegum's bond calculations. There's actually a guy that I follow on LinkedIn that he's releasing a book that has to do with similar sort of stuff. And his book, because he already showed us like the supporting materials and stuff, he has like all of these Excel spreadsheets and stuff. So I think that it will be very hands-on practical. So I want to read Steegum's book before I read his book so I can compare them. But I think that's the next one on the list. And then maybe I can get into the machine learning. Although I think that the book I'm going to use for machine learning is what is his name? There's a newer book that came out last year. Halprin and I can't remember the other, but I follow them on LinkedIn too. I don't know. This was a thing in machine learning for a long time, was we were like, oh yeah, like we totally screwed up. All this earlier research that we had was really stupid and useless. But you know, the other thing is that when I look at like these machine learning applications that I've seen in finance, they're typically not, okay, you use this and then that's your trading robot. Especially for the machine learning algorithms, they're usually more like, here's this particular like how do I use the fundamental data about a stock to predict what its stock should be right now, right? And there are certain areas where you know that this thing factors into the price of it, but you're not entirely sure how it factors into the price of it, and you use machine learning to make a matrix, and then you end up getting a really solid result, right? That's where I've seen the most applications in machine learning. Not that it can't be used for what we're doing, but I just haven't seen it yet. Well, I guess hidden Markov models is probably a thing. Probably that's one of the areas where I want to focus on the most. Feeling a little, I don't know, woozy. A little woozy. The point of control is the O2 half, huh? So we're roughly back to where I exited now. In the 5-year, the volume is still to the long side. Actually, in all of these instruments, the volume is still to the long side, but the 10-year really looks like it's like directionless right now. Oil doing some movement this morning. They had a little bit of a drop. Oh, that group therapy that I was looking at earlier that Jigsaw has, I thought that was an article, but it's going to be a webinar. Nassim Taleb, Saudi Arabia, not only are they not there when you need them, but they seem ready to switch sides if it fits them, yet the regime has been... well, hold on. Who switched sides here? Okay? Because it wasn't like... do you really expect to come in and say, oh, we're going to make you a pariah, we hate you, we want to dissolve our relationships with you, etc., 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 and then expect them to continue being loyal? Like, really? Like, really, dude? Let's see here. Rio Tinto warns of excess globalization in supply chains for critical metals. Well, this uptrend so far looks okay, but it's been a long time since I've seen the 10-year treasury trade like this. Like if I come in here, like you can actually draw a real chart pattern here, right? Consolidating triangle going across like a wide range. I haven't seen that in years. But generally speaking, for the treasury, that is really more indicative of a market that doesn't have a whole lot of direction. So that kind of makes me want to trade less. Yeah. I'm like breathing heavy. I'm wondering, well, no, like it took a loss, but it's a tiny loss. Should be over it, but I feel a little woozy and like stressed out for some reason. So let's just kind of chill here a little bit. We've got plenty of time. S&P 500 about to start here. A moment. You know, another thing for that I should mention. I'm really bad at, like, you know, mentioning all the good stuff that we have in the video description, and yeah, it's just not on my mind. But like the reality is that some of the stuff that I have in the video description can be some of the most useful things to a new trader, right? Especially like I'm really proud of my NinjaTrader indicators. I don't see how people trade without that stuff, so it's cheap. Okay, they turning back down again? Yeah, so in getting this thing, I don't know. Do you see right there? I don't know. We'll see. We'll see what happens. There was 1,000 lots up there at 02.5 and 03. But it just seems like when we move down that it is much more forceful and slippery. I don't think that necessarily tells us that we're going to move up or down. But it's just there is a noticeable difference between the buyers and sellers here today. Maybe because we're likely to... Maybe because the order flows are probably tilted to the downside. The Renko backtesting discussion was very good. Thank you, Greg. We've talked about that one a couple of times before, so kind of like prepared. You know what I mean? I just get frustrated by a lot of what I see in the trading community. Like it's not like, oh my gosh, other people are trading in a way that is different from myself, we must put a stop to this. It's not that. Like, variety in the market overall is good. And you know what? If people are trading methods that don't work, that's to my advantage, right? That's to my advantage if they're doing something that obviously doesn't work. But on the other hand, I kind of view retail traders are we're kind of on the same team. I mean, it's competitive, but we're competing against the institutions more than we are competing against each other, right? So when I see retail traders coming in and using things that I know aren't very effective, to me that's just another person that we could be collaborating with and generating value that is really just sitting there spinning their wheels and not going anywhere. And that drives me crazy. And then especially when I see people that are like being actively taken advantage of, that really bothers me. It really bothers me. I think it's maybe I'm just have a stronger conscientious streak in me than I realize. But I just can't stand it when I see people that are making money without really providing value to the market. Is how I would explain it. If you make money, I think it should be because you're providing a valuable service to the market that benefits people, right? And when you just trade the education that just causes people to lose money, you're not providing value to the market. Hate that. There was sure has been a lot of that in the last 2 years, hasn't there? Okay, so we're getting a little bit of a strong impulse there. There was kind of maybe my spot again. Looks like it's already backing off a bit. An initial move in the S&P 500 has been to the downside. So that means you forbid Bitcoin, basically. I've basically abandoned Bitcoin. Basically abandoned it. We a lot of the beginning parts of this channel kind of got built off of riding the crypto bandwagon to some extent. And now I just want nothing to do with it. Just want nothing to do with it. Like the thing that really turned me off to cryptocurrency stuff. I mean the whole tether issue was one thing that was really instrumental in that. But the other thing was just going on Reddit and seeing all of the people that were like outright describing it as a Ponzi, basically outright admitting that it was a Ponzi, and saying, well, what's wrong with that? You can still trade it and make money off of it. That's what really, or like when Sam Bankman-Fried basically described this instrument and basically it was a Ponzi scheme. That's when I was like, no, I don't want anything to do with this. So the treasury market looks well supported. I think you're kind of having a little bit of trouble here. Okay. Whoa. That was not the way that was supposed to go. Okay. Could have been worse. Could have been worse, but that's oh man, why am I saying that? Because that's a really bad entry. Okay, well, it came back, so I maybe it's not so bad, but I wish all the YouTube crypto peddlers should be sued. The The SEC does not have enough resources to go after everybody that should be gone after, huh? I really appreciate these people like CoffeeZilla and who's the other guy? I can't even remember his name now. There's another guy that's commonly calling scams out. I really appreciate the work they do. I wish that I could do that work as well as they do, because I see so many scams that just drive me crazy. But, you know, because the SEC can't go after everything. Yeah, Spencer, you're right. Spencer Cornelius. That because the SEC doesn't have enough resources to go after all these people, we basically have to rely on small creators to, you know, find this information and warn potential investors. And I'm just not as entertaining as CoffeeZilla is the long and short of it. Because I've actually kind of done a lot of research into those sorts of things, and every time that I started to get into it, my conclusion was that it probably wasn't a very good track for me to go down. The 10J bond column, the middle part, are the amount of orders per trade on price. Yeah, so the middle columns that are kind of dark blue, navy blue, are market orders hitting into the bids and offers, right? And if it ticks up and then ticks back down, and it's been more than like 1.5 seconds, then that number resets. And that allows me to see how many orders it took each time to try and clear price. So I think it's incredibly useful. Like, it's funny, we never really talk about it, right? Why are they black sometimes? So if that was like the inside prices are white and black. So the one where the last trade went through is the whitish one, and the black is the other one. Doesn't really matter. That's just the way that it's set up. I don't pay attention to the color of it. What I care about is we just traded up and it only took 77 contracts to do it, right? So it seems to me, although we have not broken out at 06, which is a critical thing for them to do, it seems to me that market makers on the offer are kind of jumping out of the way now in a way that they didn't before. How do you see icebergs? So the way that you'll see an iceberg is in that middle column. You know, like right now we've only seen 51 go into it. There's 600 contracts on offer right here. But what if all of a sudden I saw a bunch of volume go into it and it reads 3,000, right? Then I know that that was an iceberg. That's how you detect an iceberg. So maybe a little bit of a false breakout there at 06.5. We'll see. But they ticked a new tick and then came back down into the balanced area again. Is a little suspicious. A little suspicious. It's kind of funny because it's something that I hardly ever talk about, but that current trades column is the thing that I pay attention to the most. So I'm just seeing every time that it ticks, how many contracts did it take? Is it showing me a change in the liquidity essentially? So what am I seeing right now? Well, I am seeing a change in the liquidity because there was, I think, like a 700 traded at 06. And now 500 trading at 05.5 and it not moving through, right? So the latent liquidity is actually maybe higher in this area at 05.5 at the moment. You can hear ice on Jigsaw. Yeah, you can set some things up for it to give you a notification for icebergs, but I don't have those set up. I'm not using those. I do have these tapes that will give me a block buy sound. but the thresholds that I have them set up for, they don't trigger very often anymore. Like for the 10-year, it was like 3,000 contracts. If it was a market order of 3,000, then you would hear block buy. But like there again, like the icebergs, I'm less interested in icebergs, to be honest with you. Iceberg is more likely to be somebody like hedging and stuff like that. So I'm more interested in somebody that is an informed trader, you know? So if the market had been sitting, not doing much of anything, is really quiet, right? Price hasn't moved very much. And then all of a sudden, out of nowhere, I get a 3,000 block buy market order come into the market. That's the sort of thing. I don't think I've ever seen anything quite that extreme. Okay. But if I saw something like that, that would perk my interest up. That would be like, I think I want to follow this guy, right? Because that's like nobody's going to come into such a quiet market and throw a big market order into the market like that unless they think they know something that's going to make it move, right? So isn't that interesting though, that based on the way that the order flow trades, you may be able to some extent make some determinations about what is causing that flow, right? Like if it comes out and it's really impulsive, that's somebody either stopping out or trying to trade off of breaking news, right? If it's an iceberg, it's more likely to be a hedger. So like here in the treasury, yeah, let's say that we got up to the highs. Let's say we got up to 09 and I saw a 10K iceberg. This is something that we should be, now this one might sound like a crazy scenario, but this is the one that we should really be looking for, because we have a 10-year auction today, right? And it's very common on 10-year auction day to see a 10 to 15,000 lot iceberg. Now we haven't seen them in like let's say the inflation era. Let's say there was the COVID era and now there's the post-COVID inflation era. Haven't seen one that big, but I have seen icebergs on auction days still. So we should be looking for that sort of rate lock iceberg today. And we may see one happen up here. And if we do, we might want to be a little bit cautious. You know, that might just be a good place to take profits if we see that sort of thing. Because when you get a really strong rate lock like that, it's really hard for them to get through it. Might not get a reversal the other way. It usually just sits there. What's the reason for taking large trades on auction day? So basically what they're doing is they're hedging themselves. So they're saying, I want to buy these bonds at a certain interest rate. And if I'm not able to get that certain interest rate, then I don't want to lose money, right? So if I take a position in the futures, now if the rate changes between now and the auction, I don't lose any money. Because any money that I lose on the auction, I'm going to make in the future, right? That's what the rate lock is. And so these are big. They tend to be like 5 to 15K lots, icebergs that you might see. But here again, what does it mean? It means it's hedging. So does that existence of that iceberg give me a strong predictive signal about where price is likely to go next? No, it does not. If anything, it tells me that we might just sit here at that price, right? Because they're just hedging. And that person is hedging because they don't know what it's going to do next either, right? It's not indicative of informed trading. So this is a big mistake the reason I'm talking about it in this manner is because this is a big mistake that I made a lot when I first started trading, was that I saw the iceberg and I always wanted to make some big conclusion about what the market was going to do based on the iceberg. And what I found in the end was that the icebergs are actually probably less indicative of what's going to happen next than some of the other things that we see in the flows, right? But the most useful thing that we're going to see in the flows is autocorrelated order flow. Now, by the way, well, we've had a pretty okay move up here, and we're awfully close to the highs, so I hope that we go and we push for those highs. I'm not yet really seeing that strong autocorrelated order flow come into the treasuries. It's still, when I look at cumulative delta, especially in the 10-year, it's still flat, right? So that autocorrelated order flow and market orders, those are the best indications that we have of informed trading. And informed trading is the thing that I'm most interested in, right? The only reason for order flow is market orders. Well, I really wish it was the case that we could just always look at market orders and that the market orders would tell us where the market's going to go. But especially in the treasuries, it's something like the informed traders use like 50% limit orders. So you still have to look for those areas of absorption and stuff like that. It'd be a lot easier to trade if it was market orders were all that mattered, right? It'd be a lot easier. Yeah, so what I'm seeing here near the top is just kind of a little bit of varied meandering trading, but them still holding up there near the highs quite well. So I'm not seeing anything in the liquidity yet really holding us back. And I think that we have a good chance of them trying to make the push to break the highs. And if we do break the highs, given the situation, because I think that a lot of people were shorting stuff, I think that we could get some good extension if they continue to push through. They break 09. So let's just see what happens. They are spending a little bit more time here in this 07 area than I would like. Would have preferred that they already gone for it, right? By the way, what do we got? We don't have 8 o'clock news, do we? Oh, we do. Okay, so Fed's Kashkari will be speaking at the top of the hour. You think that move up is done? All it could be. I don't know. I don't really have anything that tells me for sure what it's going to do. That in general, this move that we had from the lows now almost all the way to the highs is I think a bit of a surprise to the market. I think it's a little bit of a surprise to me, and I think the way that the market is trading is kind of saying like, oh, we didn't expect this to happen. But you know what? I'm not quite sure where it's coming from, because I don't think it's coming from the 6J. The 6J has been flat during this period. So I'm not quite sure what it come from. Oh man. But you know what? The other thing is that we got some pretty good flows, but I'm not making much from my 10-year trade. I'm not making much at all. Well, at one point I had 15 favorable ticks, but for something that went from 30 to 08, so 2, 8, 10, for something that went 20 ticks, and I'm basically break even. That's a little weird. It's a little weird. It does look like they at least pivoted. But we'll see if they continue the pattern that we've had today, where they just, they trade across the whole range, or if we get kind of like a little bit of a pause and then attack at the highs. The pause and attack the highs would be a lot more fun, wouldn't it? What about the S&P 500? S&P 500 kind of chilling around between 3610 and 3615, which is kind of like that area that right after the news. So there was an initial sell on the open, and we are now higher than the open at least. So we shall see. I does look like on this move up too that we are getting steepening, so that doesn't help us on the 30-year end of the trade, right? In other words, the 30-year is lagging the 5. Would have been better if we were in the 5 or the 2. At least so far, it would have been better. A little bit too much vocal fry in my voice today. Maybe I'm getting sick. Do you think maybe I'm getting... I hope not. So my family is supposed to be going on vacation. I'm not going with them. Well, actually, maybe I am going with them. But I might be homesick. I might be homesick. COVID-20. I don't know. I don't feel sick, but my voice does not sound its best at the moment, does it? So I'm not sure what's with that. Do they always like, no. Well, there's always a spread, right? And the amount at which they spread, I don't know, but I think I could theorize that the rate of change for a spread does tend to be somewhat consistent, unless it's news. I think that's probably true. Like what you typically will see happen is like, this one will go 3, this one will go 2, and this one will have only gone 1. Yeah, well, I might take it if they're really going to be gone. I'm going to take advantage of it for sure. I will be able to get a lot more work done without anybody here. But I'm on support. That's why I can't go with them. So normally when I'm doing my support weeks, I have extra time to get other things done, but this time I haven't been. I've been working on this one particular issue like the whole time. Well, the volume that we're seeing here, let's say between 05 and 08 is still pretty healthy. And I would say it's pretty healthy in both directions, although there is some offers now above us at 06.5 and 07. You're doing a lot of newer viewer training explanations as it's having to speak a lot. Also seem anxious. I do seem anxious, don't I? I do feel a little bit anxious today. I'm a little bit anxious that this doesn't seem to be, that I don't seem to be getting paid on this. But I don't think that that's what my deal is. I think there's something else going on with me. I'm not sure what it is. I'll work out today. And I'll get that'll get the juices flowing, right? But I do feel now, I don't feel like that you're like really tilted, you need to stop sort of a feeling. But I do just kind of have like butterflies sort of a thing, you know? I just feel kind of flighty and unsure. I don't know. I think part of it is that the flows that I'm seeing to the long side, I'm not 100% sure why we're seeing this flow. It's a little bit surprising to me. Yeah, I'm not on tilt yet. That's the thing, is I could very, very quickly turn into tilt, couldn't I? You know, like maybe a piece of news comes out and we're instantly down at the lows of the day, then I would be tilted. Right. Can you tell me your mind observation, how you look and trade the 10J column? Why do you keep saying J? I don't know what you mean by J, but I am looking here. So where my eyes is like right here in the middle, right? Between the bid and the offer. Okay. And I'm primarily looking in the 10-year and I'm saying, okay, how much did it take it to tick up or down, right? And am I seeing a change in the liquidity? So right now, we're seeing a little bit more volume trading in this area, but it is able to trade fairly free in this area. We were able to come down, and now up again quite easily. Okay, so that's the first thing. The next thing is that I'm going to be looking at how much did the spread change. So right now, they're all in line with each other, right? Which is a little bit weird. We're not really seeing the spreads change too much, although the 5-year is leading by a little bit. Okay. So that's why I was saying my micro 10-year behaves a little bit more like the ZB than it does the ZN. And since the ZB is the one that's lagging just a little bit, I'm not getting paid quite as much. Because I would be expecting at the moment for me to be up plus 20 ticks instead of just 10. Right? That's kind of what I'm thinking about right now. Is if we know that the spread is steepening means my DOM is pointed up like this, right? Then that means that I'm going to get paid more from being in a trade in the 5-year than from being in a trade in the 30-year. That's all that was all about, right? And on a move up, steepening is what I would want to see, but we're not seeing a ton of steepening, and it's very, very subtle. Right? So this is primarily what I'm watching. Now, when I get to an extreme, like especially if we start trading 08 half, what I'm gonna start looking for is like icebergs on the bid. So if I see icebergs on the bid, that might be a before she goes sort of a trade where they absorb a little bit on the bid and then they pull their offers and try and get it to spike higher, right? I don't know if that's what we're going to see in this particular situation. And if I did see that, it wouldn't be a tradable one. It's a 50-50. But when we're in a strong trend, when we're in a trend day up, those will bust every time. And they're really, really, really good entries. So that's why I pay attention to those. And because you do tend to see like those icebergs at those tops and bottoms. A lot of the time, it's like market maker rebalancing. In this situation, if we break 08 half, we're getting to a point where one of my models says that now anybody market making short is losing money. So I think that you got a good setup for that. If we do break 08 half, that you could get a little bit of acceleration after it. Can only hope. But it's still trading pretty freely in this area. In fact, like notice that they're able to trade like 900s, and it's kind of like nonchalant about it. So like people are trading in this area. There is a big order at 05. How long has that been there for? I'm not sure. Okay, 1254 at 06 half. That's interesting. And 1248 at 07. Right? So icebergs on both sides. That's interesting. Okay, but it looks like they did clear the offer side iceberg at least. Uptick, good bid behind it. Easy take at 7.5, only 100, 200 contracts to get that to go bid, but the bid does not follow it. And now it does. Another thing that I might notice is like this one will tick up and this one doesn't. And when this one ticks up, the bid doesn't follow it. So then it comes back down. So you can kind of see where it's like to really get a good move, usually they have to go together, right? But I'm probably making this more complicated than any new trader really needs to be focused on, right? Just just watch it, and you'll kind of get a feeling of the pace and stuff. The thing that matters the most is that you have a good predictive order flow to be able to tell you, like, oh, if I start to get a move in this direction, I might want to follow it, right? Okay. Oh wait, goes bid quite easily. I am still not 100% sure where this money is coming from, though. It must be from maybe something is going on in the gilt market. Like maybe the UK market is doing well here. So I can see the British pound is still kind of like in chop. The 6J seems tilted to the downside. So this move that I'm seeing so far in the treasuries doesn't seem to be correlated with anything that I'm seeing on my list. Doesn't seem to be correlated with anything that I'm seeing on my list. So I'm not sure where the money's coming from. Bank of England buys 1.9798 billion of long-dated gilts and rejected 38 million offers of long-dated gilts. Okay. So what we are getting right now is some information about the Bank of England's operations. So maybe it is the Bank of England buying here. Well, not buying, but I mean the market reacting to what the Bank of England did in its operations today, which I guess is a good thing, encouraging thing. Okay, so I'm not seeing the level break iceberg here yet. Sure was a good move up going into this though. Like the amount of volume when we ticked up here wasn't super great, but it was like tick, 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 like it went, there was a little bit of urgency to it. I got this pen. It's like a fully metal pen I just found at the store. It's a zebra pen. And it's got this knurling on it, and I just really like this knurling, and I constantly find myself sitting here feeling the knurling on this pen. Probably shouldn't say things like that. Somebody might think that I'm making some sort of innuendo or something. No, it's just the metal pen, okay? There might be some. I mean, we've traded 5K now at 08.5. There might be some more that trades through up there. Oh, you guys thought that one was funny, huh? Okay, let's see. This might be a spot where you might see it at 08.5. Let's see. The number of level 2 changes that I'm seeing here as they tick up to the high, not quite as high as I would expect. Okay. I'm backing off of it. Not bad though. Not bad. Seems like these micro yields are moving a little bit weird. Like, remember we were kind of at these prices back in when it was like 04. Right? So I don't know why the yields aren't really moving. Don't seem to be moving. ECB's not says no indication that 75 basis point hikes could not achieve target. ECB's not says a need for more significant rate hikes before neutral. Am I not? Oh, you know what? I'm not sure. I think I turned off my news squawk because I think I should have heard something from that. And shouldn't we be getting Kashkari here now too? Bloomberg says Bank of Japan Governor Kuroda pledges to maintain monetary easing to support an economy that's still recovering from the pandemic. Okay, now that latest move down, there was some volume on it. Yeah. Oh, you see the seller in ES getting aggressive here? Yeah, you're right. There's actually a lot of volume trading over there in the ES in this spot. I'm not quite sure what to think of this. I think that I might want to try and bail here, but it's not looking very good. I'm kind of surprised that that's like all there is to it, but let's see here on this last one. Okay, so I would prefer to get 7. I don't know. I when I got in this trade, we were at what was the time? 7:30, 7:35. 7:35. Yeah. Yeah, so we were substantially lower. Why am I not getting paid? This is a little weird. It's like the DVO1 for the treasuries is like decreased substantially all of a sudden. Well, at 05, no, because I got in at like 04 or 03 half. See, and I'm like close to break even in my micro trade. I don't know what the problem is. I'm not too happy about it. I am feeling a little bit calmer now than I was earlier, but maybe that doesn't last. I'm starting to feel a little more nervous again. Here's what I said on Squawk Box CNBC in response to a question about yield curve inversion. Capitalism is supposed to work in that you get more money for lending longer. That is kind of an essential aspect of it. Said nothing about it being a problem of capitalism, says Steve Leishman. Okay. No clue what he's going on about there. Okay, maybe they're going to turn back up again. Let's see. This is still a little bit more of a pullback than I would like. Maybe I'm being too picky. Am I trying to impose my own ideas of the way that things should be on the market? It still kind of looks to me like they could choose to do almost anything they want. Although I am noticing one change, and that is that the 30-year is higher than the 5-year here on this. My chart is now facing downwards. So maybe we are getting some flattening here. Although I would like to see continued up movement there in the 30-year, and there you look paused. Okay, that was an interesting tick. Straight up, straight down, so frustrating, says Lean Umbrella. Are you just talking about the degree to these moves? Yeah. Seeing the treasury go like all the way to the lows and then all the way to the highs in one swing is like really odd and frustrating, I think. Okay, now we are hearing from Kashkari. Okay, Bank of England accepts nearly $2 billion in buyback of inflation-linked bonds. I do think that that's probably where we were getting the upside action from. But now that that's passed, they may be on their own. But I think that sounds like it's good. That sounds like that's a step in the right direction towards avoiding some sort of further market panic. Actually, when you think about it, to be in a trade here now for how long has it been? Almost 40 minutes and only get 10 ticks is actually quite an improvement in volatility for the treasury market. It is actually less volatile today. Yeah, that's not too useful. That's not too helpful, that tick right there. I am getting a hint of selling in the 10-year. I can kind of see the robots sitting there like they want to try and catch the edge and buy it here. And then they get stopped like there. And then that was a down tick. Okay. Maybe just some more comments from the Fed speakers that we've got here at the moment, but nothing too significant. You got a big order there at 05. Been there for a long time too, by the way. And they've been reluctant to trade into it. See, the 30-year wants to continue buying. Like, they'll tick up and they'll get a good bid, but these other two aren't cooperating. Well, the more I sit and watch this, the more I'm kind of starting to think that the market is trying to tell me that this isn't the best action for me. And that I'm just kind of sitting here holding out hope for a push of the highs that may never come. Well, that was a good uptick. The 5-year didn't clear 02 though. Yeah, you can see the robots will come in and hit into it, but then it doesn't go. Down tick. That 05 has actually gotten bigger, and there's some volume behind it at 04 half as well. Is really the 5-year seems to be the problem here. Whoa, okay, 2 ticks now and up in the 10-year. Oh, that's actually within the range. No, okay. Yeah. We need a little bit more than that to breathe easy, unfortunately. And I'm still a little bit, so let's watch here 06 half. Okay. That one, they took it. So I was looking to see for more signs of luring, but we didn't see it on that one. They ticked up, they were able to bid a little bit. So it's really not telling us a whole lot of anything at 06 half. It's just kind of going back and forth there. Still seeing maybe a little bit of signs of some steepening in the 30-year. Time is it 8:19? I want to sit down and say that we've got a hole at 07 that we're stuck in, but I'm not sure that the action that we've seen is really in line with that theory. I think it may be the case that the move up that we saw was based on the Bank of England's actions, and that we kind of have to think of that as like a news move, and so that this whole area is just kind of like disorganized now, rather than one price becoming a big sinkhole that they fall into. Because they do seem to be trading a little bit wider of a range than we expect. Well, now they finally ticked down to 05. Do they actually trade it? Nope, not that time. Here again. And they seem really reluctant to hit it. Quite a bit of back and forth there at 05 half, but nobody hitting 05. It's now done that like 5 times though, and there's a pretty big offer there at 05 half now. Maybe they do trade it. Oh, okay, so they traded half of it. They did not clear it, and now there's 1,500 on there again. This is maybe the orders related to the auction that I was kind of saying maybe we might see. Oil taking a further dive. Ooh, oil. What is with you? You're in a funk today. Down almost $3 now. Okay, so I just heard a comment from the Deputy Treasury Secretary saying that the OPEC's output cut would actually be bad for OPEC if the economy weakens. And I'm like, that doesn't make sense at all. If the economy weakens, then it totally makes sense for them to cut production. Like, that makes zero sense at all. What the hell is he talking about? How is this guy... Am I missing something about his comment? Because that sounds like a dumb comment to me. Okay, well, so far those big orders at 05, 04 half holding pretty well. We're not getting like market buying coming into in it all, but they are backing off at those prices. Is he just being a political talking head? I don't know, man. Maybe that's why Yellen's getting out, right? Because she doesn't want to have to embarrass herself like that anymore. Maybe my news squawk was just summarized his comment incorrectly or something, because I'm not seeing it that pop up on Twitter. Okay, I think that Kwarteng is speaking right now. Chancellor Kwarteng insists the ending of the Bank of England's bond buying program is a matter for the governor, not the government. Okay. Ooh, look at the offer on the 5-year. And they traded through it. They bought all of that just like that. They gobbled that up. Are you kidding me? Okay. But do you get another tick up? Come on. No. Ticks back down. Every time I feel like I'm catching a glimmer of hope here, and then like nothing happens, right? And they've just kind of become stuck in the mud here. That looks a little bit better. The 30-year is a little bit encouraging. Actually, that was a significant amount of buying through there. So if I see that buying in that price, I mean, that's good, but I want to see follow through from it, right? Yeah, my new squawk is having issues. Oh. Kashkar is saying there could be a housing downturn, but not necessarily a crash. I agree. Not as saying there's a risk that expansive fiscal policy will create upside risk to inflation. Basically warning governments, stop spending so much money. You don't fix inflation with more money. That's how you make it worse. Okay, now that was a good uptick. You see very clearly they all ticked up. There was decent volume behind it. There was a decent bid that came up behind it. It held, it was solid, and just tick right back down. And then another tick behind it, right? We're seeing the 30-year is causing the curve to flatten here a little bit. They could all just be following that market order that smashed the guys in the 5-year. I mean, the volume in the 5-year is just flipping on its head really, really quickly here, but that's a pretty good. And the 30-year almost breaking highs here. Vets Kashgar, U.S. household finances are stronger than they were before the pandemic. Maybe that's true. Sometimes it sure doesn't feel like it. I don't think that I have a good handle on that, because when I look at my own finances, I mean, first of all, things are usually pretty easy for me, but don't have as much as I did before the pandemic, because my wife was working back then and she's not right now. So Anthony Crudelli having a bad hair day? That's impossible. I don't believe this. So they're doing a webinar today at 10 o'clock my time, 12 o'clock Eastern time. He says he's having a bad... I think he's full of crap. I don't think that that's possible. Okay. Getting once again, now that we've come up to the higher end of this range again, you're getting a healthy amount of trade. And the most I've gotten here off of this is 16. Okay, it's still flattening here. It's actually, now with the flattening, they've retraced all of the steepening that we've had since the since PPI. This is, normally a day like this would be really, really, really frustrating. And I am finding this frustrating, don't get me wrong, but I'm also finding it really interesting. Maybe just because we haven't had action like this in a long time. This feels like a real slog, doesn't it? You're skeptical of the buy flow in bonds. I do kind of feel like that the buy flow is kind of feels like it's coming out of nowhere, huh? I think though that it's coming from, you know, I think that things are going well in the UK today, at least. So I mean, I think that we could, if we're going to look at the trading session today, I think that the big takeaway would be that things went well in the UK and that we had more buy flows in the treasuries today than we expected. And I'm going to bet that the 10-year auction today is not too bad. But you know, it was a real slog. Does it mean that they're gonna, or sorry, the but that I was getting at is, but does that mean that they're gonna be able to break the high at 09? I don't know. I hope they do. I think it could be fun if they break the high at 09. I think it could be real fun, but I don't know if it's actually gonna happen. This is just a real slog. Well, that polling was there was some polling there. I think that I will pull. It will be curious to see. Okay, so oh no, didn't hold. They actually smacked it back down there, 07.5. The whole thing here is there's these big orders at 08 and 08.5. If they start ticking into them, do those hold? Because the big orders on the buy side down at the bottom at 05, those held, right? They haven't been able to get through that after trying like 4 times. But I mean, look, it's a healthy amount of trade both ways up here now. Healthy amount of trade both ways, although flow is tilting towards the long side now. I think this is a level that they are buying, but as soon as the buy meta order is done, usually the afternoon it starts to sell again. Nah, I really think, Mr. Bond, that the biggest factor right now, now that we've got like the Bank of England's buying operations and all that stuff out of the way, the biggest factor now is the 10-year auction. I think that the 10-year auction is probably the best explanation for the flows that we're seeing right now. You know, that's why we have relatively large orders out there and some decent icebergs at places, but like overall action, that's just a real slog. I think that we're going to have a real auction today. You know, I think it'll be a good auction. I don't think that it'll be like, oh, it was crazy good, but I think we'll have a good auction today, but that it will be, you know, it will just kind of show that people are trading again, I guess. Because yeah, the action that we have today right now, not super indicative of some larger, I mean, the large meta order that we had must have been in the UK, because the move up that we had isn't really correlated with anything else. So I think that means that it has to have been coming from the UK. So let's say that there was that meta order. So once the UK was done with their operations, that's the end of that meta order. Now, are we getting some other meta order long after that? We might break highs, but it looks like there's a real slog in that there's not like a really clear directional block trade going on here like that. Because I've been waiting now an hour. Been waiting an hour. Most I got was 16 ticks. And it's starting to get to the time where I have to start thinking about what I'm going to do with this. $3.94 isn't terrible. Kashkar is still speaking. Is there an iceberg there? 06? Man, that order at 05 is just getting bigger. They keep bouncing off of it. There's definitely some iceberging at 06 though, man. $1,500 to take 05 half. Oh, it's kind of pausing. They might do it. And nothing happens. Hardly anybody trades into 05 half. It ticks up. Not a strong bid, but now we got big orders above us at 06 again. Oh, what's this? We have had a move up in the 6J here in the last 10 minutes. Now that's weird that there wasn't more movement from the treasuries off of that. That's really weird, actually. I did not notice that until now. So, and now that is favorable, but a little... So, once again, uptick 05 half. The buyers are having to push through a lot of sell volume to tick up, but they are doing it. And nobody wants to hit into 05. When I look at an order like that, I'm always kind of thinking, well, like if they trade through it, there might be like a badoosh sort of a thing. But given the context and the 10-year auction today and everything, and them not wanting to trade into it, it's probably the case that you just don't want to mess with that order. Who knows how much else is behind it if it's like a real rate lock. Now, that doesn't mean that they're going to have enough volume to break the highs, though, does it? We're about 2,000 contracts long here since we started to see the flows reverse to the long side in the 10-year, though. We're also still pretty decently long in the 5-year, although I think that was mostly just because of that big block offer that somebody stuck out that the buyers decided to take. So. And the thing is that when they buy it here, it's not able to hold it, right? Okay, so some of those offers are pulling a little bit. 400 contracts pulled off at 06.5 at least. And if they decide to take that, do you think that the 07 will still be 1100? Lower 1100 is not that big, is it? We're looking more like 1500 or 1500s earlier, 1300s. New Squawk poll. When does the Fed next cut rates? 20. Yeah, I'm going to say 2023. And 58.6 say 2023, 27 say 24, and 14% say 2025. Okay, well, there are some optimists out there, apparently. Wow, Tesla is on its 6th straight red day. Is that true? Wow. 2014. No, man. You guys. Maybe this guy at 05 really wants to get filled. I don't know, man. Because we've just kind of been skidding along here for a long time now. I think that oh, there we go. Okay. Yeah. We had a couple of little jumps up there in the 10-year that kind of sputtered out, and now we're just kind of skidding along the bottom. It's like, you can't do anything until you fill me. But like, it goes back and forth at 05 half a lot, and they can't. Okay, now you're getting push and pull, right? You push the 5-year down in the hopes that they will hit into you in the 10-year. I think this guy does want to be filled. Oh shit! Oh shit! Did you see that? Oh my gosh, so they hit it and 5,000 contracts trade into 05. Oh, that was a lure if ever. Now that doesn't mean that we're gonna spike back up, but that was funny, man. That was funny. I guess the guy at 05 did want to be filled. 5,000 it was just like that, like just boosh, 5k, like, oh. Oh, after the stream, go back and find that 8,000. That's a rate lock, guys. They traded through it, and now they're being like super nonchalant about it. I think I have to puke here now. Yep. Oh. Fine. If I had more time, maybe I would try and sit through it, but with it trading like that, there's a pretty good chance that they come back to 05 though. Man, that sucks. Oh geez, look at it on the chart. Look at this. Wow. I haven't seen something like that in a long time. Look at how much that was, like all that volume. That one set of trades was eclipsed the entire rest of the session's cumulative delta. So basically, that was like the only trade that mattered to the outcome of this. So I think that I might have been able to hold on a little bit, like I can be getting break even right here now. And it may actually bid back up, right? But basically, if we're in a situation where one big block order of 8K getting filled is the most important thing in the market, that's not a market that I want to be trading in, right? So that's why I got out. But let's see how the aftermath. We got about 5 minutes. We'll see how the aftermath plays out. We might get stuck at 05 though. Like there's a really good chance that we sit here and it doesn't do much until the auction. Man. Okay, there you go. See, here's where I'm like, snap, I shouldn't have gotten out. No. I did what I did and it's okay, and I'm just gonna chill. I do think now, reflecting back on things, you know, I had an opportunity to get out at plus 10, plus 15 or so, and I didn't, right? So I might have been able to judge that. But overall, I think my conclusion here is that this was not action that I want to trade, right? So really the correct thing would have been no trade. Or if I had taken a trade, I guess that's the other thing, is that really would have been better to have gotten in somewhere down here. Like I could have gotten in the like 3.96. That would have made things a lot easier, right? So today's title is going to be Huge Collision on 10-year auction day. Save. It was kind of funny how that all works, that like some of the most exciting stuff doesn't actually provide any edge for you, right? Because look at it so far. You're trading back and forth at 05.5. Maybe I could have gotten the 7 that I wanted, but I was just so, oh man, it was so big. Like, oh, we're sitting here, there's 2,000 contracts sitting on there, nobody wants to trade into it, and then all of a sudden 5K all at once. Like, whoa, man. That's... I don't know what it means for where we're going, or I think it's probably a rate lock. I think that it probably means that we kind of sit here, but it sure is fun to watch, isn't it? I hope that you were entertained, as I sure was. I think personally, I think that being able to view and witness that was worth the $3 that I ended up paying for. Think it was worth, frankly, would have been worth $15 if I had to have paid that much. That was pretty cool. But where do we go from here? Kind of be interesting to see if, like, the people that filled them, that now we have to get some sort of a rebalancing in order for that to all work out. We're coming up on my time here real quick. This is when I need to do my things. I gotta tell you guys, if you're new here, make sure you click that subscribe button and click the bell icon, because when I post a new video, you're interested in this sort of stuff, then you're going to want to watch my videos when they come out. Also, it's a lot easier to find the stream every morning, because most of these people that are here, it's like the same dozen or so traders every day here for years and years and years. You hit that bell icon, it's a lot easier to see when we're going live and find the stream every morning to come and chat with us. Also, I have a bunch of links in the video description. So you got, there's a coupon, I think it's $30 off for buying Jigsaw. Also have a Financial Juice affiliate link down in there. You're gonna have a new squawk if you want to trade. And my indicator package that gives you some critical tools that NinjaTrader is lacking, like spread charts. So check out those links in the video description. And we'll see here how much I regret dumping off of that big order coming through, because look, they're pushing the other way. I'm still a little bit skeptical. I'm so one scenario that I do see happening. Well, first of all, the scenario that I'm always worried about in a situation like this is that they just get stuck at 06, right? And they can't go anywhere. So like I come in and I'm like, oh yeah, it's gonna go. I buy at 07 and it doesn't go anywhere, right? But I think another scenario is that they do breach the highs and it ends up being like a false breakout and gets smacked back down, right? If I was gonna stick around, I think my game plan would be from here would be see if it's able to, we're able to get continued upside volume or not. So far we haven't gotten that yet. With the hopes that I might be able to be long going into the auction. Because the auctions often tend to cause buying in the futures. So the 10-year auction may lead to be a bullish. Wow, they took out 700 there now. Wow, but 700 the other way. Don't know what to think about that. But see, here's when I want to quit, right? So if I had held out, I would get 12. I'd get 12. I guess I probably should have held out, huh? Shoot. That's okay. Only last 3 on it, and then 5 on the first trade. The first trade was bad positioning. Yeah, definitely. Actually, frankly, the second one was bad positioning too. I probably should have been able to get 3.955. Suck. It's still kind of acting like I don't know if you really want to touch it. That was a good uptick, but it's not. Still a little fuzzy. Still a little fuzzy. If they're gonna bust the highs or not. Could bust the highs. I think that the bust of the highs could be fun to watch. But you're gonna have to watch it without me, guys. So hope you enjoyed today. We will see you tomorrow. CPI is the big day, right? So happens today probably doesn't matter anyways, because the market is just going to go crazy based on what CPI is. So I'll see you then. In the meantime, stay excellent, team.